Hey YouTube, what's going on? Chris here. I want to bring you an update of something I was doing some studying on. I had a quick little break in between here, and what I was looking at was volume. And what I wanted to talk about today was volume with the confirmation of bullish candlestick patterns. So what I wanted to use as an example was Bitcoin. And guys, we're trying to find that bottom for Bitcoin, right? And we're hoping that it was around that $7,200. And one of the reasons why the bottom may have been in and why we may be starting that uptrend again is due to the fact that we had a bullish engulfing candle and it came on significant volume. And I wanted to read you one of the notes that I had written down here about volume. So number one, it says heavy volume accompanies the formation of a bullish candlestick pattern. So that's what Bitcoin ended up having. We had a massive bullish engulfing candle on heavy volume. So that's huge. And it said examples are hammer or bullish engulfing candle, and what it will do is help confirm a bottom, because we know how tough it is sometimes when you're having those lower highs and lower lows coming in, then all of a sudden you go up and you may not make that higher high, then you can actually drop down for that lower low. But what they're talking about is that if you have one of these bullish engulfing candles or a significant hammer with a really long wick and it comes on good volume, that's when you know that it's a true bottom most likely and the trend's reversing. Because guys, it's so important that if you have a breakout and you start making very powerful moves, but it's on low volume, a lot of times that's going to be a false breakout or a 5% failure. So if you're looking at a chart pattern and say you're an ascending triangle and all of a sudden you break out through that horizontal top that you have, because with an ascending triangle, you're going to have higher lows for a bottom than you're going to have a flat top. And what happens is once you break out of there, if you don't see it swell on huge volume, guys, most likely you're going to have one of those 5% failures where you can go up, maybe 5%, and then you actually fall back down through and it can be a broken pattern. So that's what I really want to put on your radar today, is just really study volume. It's something that, you could spend a year on looking at volume and studying all the characteristics about it. Even when you're looking at a bull flag where you'll have that beautiful mass of volume, then the volume will dry up for a week or 2 weeks, somewhere in that range, and then you'll have that another big shot up, another leg up. And guys, these are the things that you just want to learn, and you want to put them in your back pocket so that when I see this bullish engulfing candle on heavy volume, maybe this is the bottom, this is the time to buy in. Or if you see something like a Harami pattern that's a little bit weaker and it's on lower volume, then maybe that isn't necessarily the bottom and you want to wait for more confirmation. So that's what I like to do, guys. I'm huge on confirmation. I'm not a person who wants to FOMO anymore. I've done that in the past. I don't want to FOMO. Now I've learned if I miss a move, I'm sleeping in the middle of the night and some whale from Japan puts in a massive amount of money, there's nothing that I can do about it. You got to sleep and everything. So what I like to do is play both sides of the market. So say it spiked up really hard and our RSI is at 90, then I'll jump into some type of short with a buy stop on it and see what happens, and vice versa. If we really get pushed down hard and there's a really long wick at the bottom, some type of hammer candle or bullish engulfing, then that's the time to jump in and see if you can ride that up, put your stop below that. And basically, if the price is going to drop back down, then your confirmation was wrong as it is and you're going to get stopped out. So it's just all about finding the best opportunities and that risk to reward ratio, guys. I can't get over that enough. Really look for risk to reward ratio of at least 2 to 1, 3 to 1, 4 to 1. That's what I like to look at, and that's what I do. So guys, if you get some out of this, you like these short little ones like I did last time. I know a lot of people like the trend line break. I'll keep doing these from time to time, but it's just something I was really studying on volume today and I wanted to share it with you. So whenever you see those breakouts, always look for it on big volume. Otherwise, most likely it's going to be a false breakout and you'll see people jump in the shorts and then ride that down. So just wanted to bring this to you guys. Hope you're having a wonderful day. God bless you all. Take care, my friends.